Yes. What's up, family? How we all doing? What's going on to the YouTube family? Love and appreciate y'all for hopping on. This your boy Skag on behalf of Profit Society. We are going to be here talking about the FOMC announcement, which will be in about 20 minutes. We'll get this started in about 1 or 2. Feel free to drop your locations in the chat. Feel free to send out this link to anybody you guys know that needs some fundamental knowledge and sauce. We're about to dive into this and see what the Federal Reserve really has for us today. So what's up, family? Again, just drop those locations, say what's good, let us know how you're feeling. We're going to continue to let this tech house music vibe out for a little bit as you all kind of get settled in. Love and appreciate y'all, family. We'll see you in about a minute or so. Let's get this thing kick started. Let's see who we got in the chat. First and foremost, let's get some shout outs to some locations and people. So if you guys have not yet dropped your location, if you've not said what's up in the chat, make sure y'all do that now. Let's see, we got that boy Tony in there, we got McCall, we got Glizzy YouTube, that's kind of funny. We got Daniel, we got Jerry, let's see, out in New Mexico. We got Chintaka in the chat, what's going on? Mick, what's going on? We got San Diego in the house, we got Jose. We got Ebony, we got Jose again. I'll give you 2 shout outs, my guy, out there in Granada. Let's see, we got Bastion in the chat. We got SPG. Yo, what's the name of this that's playing? You know, funny enough, whether you guys believe it or not, the music I just had playing is actually created live by an AI. So that was actually some AI. I don't think the song name specifically has a title. And I don't even know if I'll ever get to play that song again because the AI is just doing its thing. So you guys know me, a big fan of AI, but that's, yeah, the AI is just out here generating random vibes right now. So I don't really have a name of the song for you. But let's see, we got Texas in the house. We got Houston, Texas in the house. We got Baltimore, Maryland in the building. We got Commando. We got Oregon. We got Milwaukee, Wisconsin, Minnesota. We got Bradenton, Florida. We got Oregon again, Michigan, Baltimore in the house. We got New York City chilling. Right, I got a lot of people from Oregon. Either that or you, yeah, no, you just spamming Oregon. Okay, shout out to all those out in Oregon though. That's epic. Yeah, it is kind of epic, man. Listen, I love AI. So when I found AI that could play music, that is copyright free, that we could all vibe to, you already know I had to throw that on. So that's probably gonna be the new soundtrack to my life while we're here on YouTube. Let's see, we got Barbados, we got Queens, New York City, and just general. Manchester, UK. We got Pennsylvania, London, Nigeria, Rotterdam out in the Netherlands. All right, shout out to Greensboro, North Carolina. But listen, family, we about 15 minutes out from the news events. So I do want to kind of jump into this. Let's get the, let me just first off make sure that we're over here. Let's see what we got on the news docket. As you guys know, we are taking a look at the FOMC results. Right, so we got about 17 minutes until we have the statement and the interest rate decision, and then we got about another half hour from that time until Mr. Jerome Powell will go live and just begin to, speak on some of the things that they released in the statement, their thought process behind the decision, and ultimately what they're going to look to do going forward. Now, it is widely expected that the Federal Reserve today does their first 25 basis point hike, right, coming down from those 50 basis points. That is what is in the forecast, and to be honest, it's all over the news. I've seen it all over Twitter. I've seen it all over CNBC, Bloomberg. It is widely expected that they come out with this 25 basis point hike. So I can almost, um, I hate to use the word guarantee because Mr. Jerome Powell could certainly come out and say they're doing a 50, which is what they did last time. But it is almost widely expected or guaranteed to come out at this 25. Now, what does this necessarily mean for the market? I mean, for it to be the first 25 basis point hike, it does let us know that, potential pauses may be coming into the market, completely pausing the hikes as we kind of get near the Fed's target goal for rates. I don't believe that will immediately go to a pause, but that is going to be what the market is looking for, is when the Fed plans to actually just do no rate hike and just kind of keep rates up here. Right, so as we kind of approach this, again, I am looking at this from a bearish dollar standpoint because fundamentally and logically, this will be bearish for the dollar, right? Because as we kind of get to that point where we're pausing or even possibly just looking to eventually decrease, which I think we're still quite a ways off of, that just makes the dollar less appealing in comparison to other countries that may, or other central banks for that matter, that may be looking to increase rates. So this will be looked at as fundamentally bearish. However, there is some reason to believe that a decision like this might give us some sort of blow off top type scenario. So although the reaction may initially be bearish, there is some reason to believe that it may not be sustainable because the market has been pricing it in, right? Like I said, there were a bunch of articles that came out yesterday talking about this decision and how we're looking for 25 basis points. So this is not really a secret. It's not really going to be unexpected. So a lot of this move, again, could have been getting priced in all week, which, again, we'll take a look at on the charts. But before we even jump into that, I did want to just see if Abel had any additional thoughts that he wanted to add to this, with us kind of going to this 25 basis point interest rate increase and just about the statement and stuff like that. So my boy Abel, if you hear and you want to add some thoughts, the floor is yours for a sec.
Yeah, nah, for sure, bro. I'm definitely excited to see what actually does come out. Again, there is still a possibility for, a 50 basis point hike, a very small possibility, but it is always there, right? And that's why I'm so excited to see what happens, right? Because again, this could be giving us pretty much a heads up as to what to expect moving forward, right? That's why these type of events, guys, are so crucial, because if they do only raise it 25 basis points, then obviously, there's going to bring a lot of optimism back into the markets, right? And when optimism enters the markets, you got to understand how that affects the currencies that we're actually trading, right? So that's really why I'm just interested to see, what it actually does come out as. Obviously, we already know what the rumor is. The rumor is that they are going to do the 25. And yeah, if the market reacts a certain way, then we might be able to go ahead and find some long-term positions if possible, right? Because I don't know, I personally want to take advantage of this, right? So yeah, I'm excited though, bro. I'm excited to see exactly what comes out.
Yeah, I mean, I'm in kind of agreement. So let's go over. I mean, we got about 13 minutes for the person that asked when will he make the announcement. Again, it's about 12 minutes now. Jerome Powell will specifically go live for his, kind of little speech that he always does half an hour after that. So that's about 41 minutes away. I don't know if we'll specifically stay on to listen to him. It is kind of boring, but I mean, if we're still on the call and you guys want to, tune in. If not, you guys can easily find that on YouTube and digest that. But we'll probably watch, a few minutes of it until he kind of gets into the boring, repetitive part of things. It's really only the first 10 minutes or so that Powell speaks that, you'll gain some insight. But anything past 10, 15 minutes, he's kind of just rambling on and the people are just asking him the same questions over and over. And a lot of it's going to be in the statement. So I did pull up the Fed website. I will refresh this and take a look at some of the data that they put out just to see if there's anything worth noting before Powell speaks. But let's jump into some charts and kind of break down again what we're looking at specifically. So, this is oil. So let's go to the DXY. As we can see, the dollar index is actually rallying into this news, which is kind of funny. Again, looking at the DXY from the macro, from like the 4-hour and the daily. Again, we kind of been stuck in this range for some time. You guys can kind of see the overall general idea that I'm looking at. I do expect the news, assuming we get that 25, to again lean towards that bearish side. But this is the problem. I don't know if we're going to stick inside of this liquidity down here. So really what I would prefer to see, again, because this announcement is so widely expected to be 25 basis points, and like the market's really been kind of pricing that in already, I do see the potential for the market to kind of come down, grab some liquidity below this 101 level on the DXY, and then if and only if some demand can come back in that drives us back above the 101.50 area, I'll probably look for, a short to mid-term kind of bounce back up into the 104, 105s. Again, fundamentally, a 25 basis point hike in comparison to 50 and 75 is ultimately bearish. So that's why we're looking for that initial reaction to the downside, preferably. But again, a lot of this seems to be priced in. We've had very choppy weeks. If you're going to look at this from a redistribution case, which is, more or less a Wyckoff term for those familiar. If not, if you're just looking at this trading range, it doesn't really seem like, even if it does break out, that it's going to have too much power to it. Typically, smaller ranges like this, as you get smaller and smaller and tighter, the reactions are less and less, right, in comparison to something like this, where you actually have a broader price range that happens over a longer period of time, and then you get nice breakouts, and same thing with this, where you kind of redistribute for some time, and then break out, and then now you're redistributing again. It's like, okay, it's at some point, this does need a little bit of a healthier pullback. So I do think that could happen potentially. A lot of pairs look like this. I mean, if I take a look at Euro USD, again, I've been swinging this to the upside for a long time. We're going to kind of ignore that for now, though, and kind of just explore the idea of, what happens after we do spike higher. Let me just remove all my lower time frame stuff out of the way here. But right, we have this wick and all this liquidity that kind of lives above here. And again, it makes perfect sense that, again, we're going to come in and grab this, especially since we have rates from the ECB tomorrow, but that's stuff that we will discuss tomorrow. With that, it's just like, how sustainable is this going to be above the wick, right? Do we get like a nice clear move off the result and then kind of ultimately find that the demand is not sustainable? We kind of come back to some of these other demand areas. When I take a look at gold, I see kind of the same thing, above 1950, above 1960. It's a little questionable whether or not this can actually sustain a nice move past that. Of course, I'm positioned on the long term, as some of you know that have been with us for some months. But that doesn't mean that I'm not looking to potentially, maybe hedge some positions and maybe even make some exits above this 1969 area. So I do, again, see the potential that if we do get some nice spikes based off the fact that we're going to be looking at potential pauses, that I'll be watching it very closely up here, because any sort of return back below, and I'm probably going to, for the next couple of weeks, maybe even 2-3 months, probably lean to the idea, again, that the dollar wants to fade off a little bit. So, as much as I would love just stuff just to kind of rip and just, continue and my long-term positions pay me out, I also do believe that there is slight potential because of how widely expected the news is, right? You guys know me. I don't like to be in tune with the rest of the market. I like when the rest of the market disagrees with me. So the fact that the entire market agrees that we're probably going to just continue up, I'll be honest, kind of scares me. I don't like the idea of everybody seeing the same thing as me. That's just the truth, right? When I was down here and I was looking for buys, nobody believed in it. So when I'm looking for sells potentially up here, if nobody believes it, that just excites me. So we'll see what we have. We're probably not going to be issuing any trades on this call, kind of just giving you our thoughts on the macro and the reactions from the statements and stuff. I'm not going to put you guys into high volatility situations, just, not my style, especially when I'm not going to be on here to give you guys follow-up management rules on it. So yeah, we're going to kind of just, watch, see what happens. But a lot of these higher time frame levels are very interesting to me. I mean, oil as well is, a little bit on the downside. I am looking at like potential bounces on this, but again, I'm not looking to take anything, specifically with you guys right before news. But if this does spike down, it could give us some opportunities as well. So let me just double check chat real quick. Let me see how you guys are feeling. Let me see. I see that boy Cozy is like literally spamming the chat. What's good, Cozy? How you doing? Can you explain how to trade news? I'm confused. So you really shouldn't be trying to trade directly with the news, right? If you're on here and you're like, oh, when news is in 5 minutes, I have to take a position now, you're probably gambling, right? You're probably gambling. You're getting way too excited. You just want to take advantage of the volatility. And more times than not, you're going to get wrecked, right? So the best thing to do, especially with major news announcements like this, is to either position yourself beforehand, right? So all throughout the early areas of the week, you had ample opportunity to look at the DXY and say, okay, well, if they're increasing rates, right, we might want to look for stuff to the downside, right? If that's going to be the bias. So you had, again, beautiful liquidity grabs. I mean, you grabbed a lot of liquidity, played into some imbalance up here. Depending on how you trade, these words might mean nothing to you. I mean everything to you. But if you really wanted to play this announcement, you would have played it earlier week, right? Playing the results is just dangerous, reckless kind of nonsense, right? That's not how you play news. You either have to play the rumors up to the news and see what the expectation is, right? All week long. I mean, it has not been a secret that the Fed is going to do this. You know, I mean, CNBC was talking about it yesterday. The forecasts were in over the weekend. We talked about it on Sunday. You know, so that you had ample time to get into positions. Now, if you're not in a position, the best thing to do would be to consume the data, right, like we're doing, looking at the reactions and seeing if there's opportunity after the news and kind of building a plan for the next couple of weeks and months. So if you're looking to just play the result, I'm sorry to tell you, you're probably on the wrong channel. That's not really what we kind of do, especially on news like this. You know, soft data may be a little bit different, 8:30 in the morning, a little different. But I'm not looking to particularly chase this or gamble like that. That's not what we do. We're professional money managers. We look at things from the macro, and we set ourselves up for the next couple of weeks based off of the information that's provided. You know, so again, different styles for everybody. Some people like to, you know, gamble on the results and play in that volatility. But I don't think the possibility of being slipped and all that other fun stuff is just too high. So again, that's not specifically what we're doing. You should learn how to play the rumors, learn how to play ahead of it, and learn how to take the information and learn how to play after. So let's see what else we have here. DXY tank. Yeah, I would prefer to see a tank so we can look at some stuff. Daniel, I know, bro. I saw your message, my guy. I have not answered you because I'll be honest, I don't typically answer DMs like that. But you know, again, I'll take a look at it a little bit later, and I'll explain why I normally don't answer DMs like that. But let's see what else we have. Alex says, very good explanation. Oh, no, that was Jay. Jay said, very good explanation. Yeah, no problem, Jay. You know I got you, my guy. Alex, what's going on, man? Love to see it. Get them likes up. Yeah, if you guys are enjoying the stream, if you guys are going to get some value, definitely throw us a like. We definitely appreciate that. I'm going to leave the DXY up here. Again, I do widely expect that this drops under 101. Again, I don't advise that you immediately jump into a trade to take that. You know, if you do that, that's at your own risk. That is not what I will be doing. But what I will be doing is tagging over to the actual calendar, again, to see what the decision comes out as, and to also refresh this to make sure that we can go through their statement here. Even though their statement, again, is probably not going to have too much information. This is not an Outlook release. So, again, it's probably just going to say what they're doing here and babble on about inflation and nonsense like that. So, yeah, Abel, Kyle, any final thoughts here as we move in the next 2 minutes? If not, you know, chat, you guys know that we're going to just see what happens, and we'll give you guys our personal opinions here.
Yeah, was good. To be honest, I'm leaning towards the bullish dollar side as well, bro. You know, at the end of the day, that sweep of liquidity for it to, you know, in turn shoot back up is really the same thing I am looking at as well. You know, I'm going to be monitoring the reaction of the initial reaction of the news. And, you know, I definitely am going to be looking to fade some of this stuff off if it gives a false reaction or a liquidity sweep. You know, I'll definitely be looking to attack directly after the release.
Yeah, so I mean, I'm the same thing. I don't think we'll, even if we get what we want in terms of it swiping that 101, I don't think the entries to the other side of the market will be today. The momentum will probably continue into end of week. We'll probably have to look at it next week. But I am prepared, however, based off what the market gives me. Because again, I'm not in control, unfortunately. Can FOMC affect for yen pairs? It absolutely will add volatility to all pairs because Daddy Dollar here is the king of everything. So yes, it will absolutely affect yen pairs. Money flow will affect everything. Let's see what we have. So Skag, you're temporarily switching your expectations towards bullish dollar. Yes, I am, depending on what we see. Again, I've been talking about it for a while. I do believe in a mid-year dollar rally, so we can continue our longer-term bias against it later in the year. I would like to see a healthy pullback, though. But let's see what we have. EURUSD, what do you think? We kind of just went over it, but if you give us a moment after this news release, again, we will take another look. But with a minute left here, we do want to, make sure that we don't miss the actual release. So again, we're widely expecting that 25 basis point hike. The Fed should have dropped it just now, and of course, this doesn't want to update right away because why would it? But they more than likely did. Let me just switch over to TradingView. There's no real action on TradingView yet. Yeah, so 4.75. There we go. We got our first 25 basis point hike. Let's go see what the statement says. Let's open up the PDF. Oh, wow, they started right away with Russia. Of course they do. Recent indicators point to modest growth in spending and production. Job gains have been robust, and the unemployment rate has remained low. Inflation has eased somewhat, but remains elevated. It has eased somewhat, so it's beautiful. Let's see. The committee is highly attentive to inflation risks. Again, still looking for 2% in support of these goals. Went by 2%. Let's see. This is going to be a whole bunch of the same nonsense. Yeah, so nothing really new inside of here. Again, still referencing Russia versus Ukraine. Let's go take a look at what the markets actually did. Let's see if we got any sort of reaction out of the DXY when it comes to this. No, that is actually kind of a very lame candle that we have here. Is this behind this? I think this is behind. Did this candle open like that? It did. Okay. Yeah, so let's see what actually happens here. Let's go take a look at EU. This is in DXY. It's not really doing too much. Honestly, the reaction here is kind of lame. I think that's because this news was widely expected, which is actually preferred because if there's not a lot of volume coming into the market, fading this will actually be a lot easier. Right? A lot easier if this is the only kind of volatility that we're expecting. So beautiful. Okay, again, look, dollar fade off. What I'm going to be looking for, again, family, again, which we may or may not get today, but we can see, again, that we're still expecting this to push down below this 101, and then we'll look at potential fades, which, again, may not come until next week. I will say, though, this is this volatility is like kind of disappointing in some ways.
It definitely is.
Yeah, this is like the most dead FOMC announcement I've ever seen in my entire life.
Yeah, I mean, again, the whole point was just to see what it actually came out as, right? So now that we know they did the 25, like it's actually a fact. What's the game plan? Like, what's going to be your game plan moving forward again?
I mean, I think my game plan remains the same. I still would prefer to see these spike higher. I don't like the idea that EU is gonna just leave this liquidity untouched. I highly doubt that's the case. Also, the ECB has rates tomorrow, and the ECB is expected to get more aggressive because their inflation is still up at like 9% or whatever it is. So I'll be honest, this is not ideally the amount of volatility I wanted to see, but again, we traded all day long and almost all week long into this. So I think my plan will remain the same. I think I will wait to see if we can grab, this liquidity below here, and then once we do, I'm gonna look for some dollar fades, because again, it doesn't look like the market is gonna overcommit to the dollar weakness here. Personally,
yeah.
Let's go see what Nasdaq has done. Let's see if that maybe had a little bit more volatility. I will say though, this is a little bit of an annoying release. Yeah, you guys can see we're actually looking at NASDAQ buys earlier this morning inside the, premium Discord. I actually think I'm still long on NASDAQ from before. I might want to actually make some adjustments here. Yeah, it's okay. But I do got to say, family, this is, I was expecting more volatility, if I'm going to be real. I was definitely expecting some more volatility. I'm a little disappointed in the markets today. Let's see. Bitcoin low time frame looks like absorption. What's my view on it? Yeah, that's actually a good point because I am long on Ethereum. Let's go take a look at Bitcoin though. Yeah, I mean, if this holds, this absolutely would be absorption, my guy. Again, though, a lot of these, this is so disappointing, bro. This wasn't even able to grab any liquidity. Like, that's gotta be a joke that the markets are this dead today. If I knew this, I probably wouldn't have even, I probably wouldn't have even started the live. If I knew this was gonna
EU
be
is
this.
finally making its move.
GU?
Not EU. EU
Oh,
and
EU.
GU both making their move to the downside.
Yeah, it's interesting action, to be honest.
I'd be lying if I didn't say I done something right before news. So
Yeah, I'm not gonna. I mean, I'm still not gonna touch this with the ECB rates tomorrow. I still think ultimately this is gonna push higher. There's no reason for it not to tomorrow. With again, because the ECB is gonna raise by 50, if not maybe 75, if the ECB is feeling a little frisky, which they probably should in order to really combat that inflation. But I do gotta say this has been wildly disappointing. Yeah, this is wildly disappointing, family. Yeah. Welp. I'm not a market maker, I guess. Let me see. Well, chat. How do you guys feel about this? You guys still think the dollar can grab this liquidity, or do you guys think, because of the expectations of today, that it's just not gonna be able to do it? EU looks too ugly on the lower time
I
frame.
think
Yeah,
maybe like we could probably make the case that it did grab internal liquidity. Um, maybe it already did grab enough liquidity that it needed. And I believe that it could just go up from here.
maybe we still have Powell to speak though, which could be ultimately what they're waiting for too. I do see your idea though. Like we did fill this wick. I can't trust it yet. I can't trust it yet. I'd feel much more comfortable even if this thing kind of took off without me, and I'll just get in on a pullback if I have to. I'm not gonna. There's still way too much liquidity built up for me to consider falling into this trap of going short. And again, maybe I'm wrong. Maybe this is the absolute high. But
I did go
based
short
off the
like
way that
right
I
before.
trade, this is by tomorrow. I think people that go short today are just gonna kind of regret it. Let's see what we have in the chats. Not gonna grab it. There's so much liquidity. Yeah, just because there's liquidity sitting below. I mean, technically, it does not have to grab it, but there is a lot. Still have NFP. You can grab it then. Yeah, maybe. I mean, that would be odd to me, though, that we'd wait till NFP to grab it. I think more realistically, they wait for ECB rates to see whether or not other central banks are going to get more aggressive. Because if other central banks don't get more aggressive, then you're kind of in a weird spot where the dollar can absolutely just bounce from here. Gold looks great on the 1 minute. Cozy, my guy. I'm on a rocket. Looks too unpredictable still. Yeah, I'm with you guys. Would ECB tomorrow affect NAS or US 30 in any way majorly since it's EU news? Again, so guys, the way markets work is everything is always affecting everything, right? So put it this way, right? If the ECB comes out and they say they're going to get more aggressive on rates, what's that going to do to the dollar? Well, it's going to pull the euro stronger than the dollar. So you will see what? Technical dollar weakness. When you have dollar weakness, that usually implies that there is going to be indice strength. So will it affect it? Yes. Does it have a direct fundamental effect? No. But the way that money flow works, and when you're buying one thing and selling another, and the impact that has, then yes, it ultimately will have an effect. But it's not like it directly affects, the U.S. stock market. It just affects a little bit of money flow. And that money flow can correct itself in a day or two. Everything is interconnected. All liquidity is interconnected. Right? That's why you have pairs. You have pairs for quite literally everything. So everything is connected in one way or another. No, I don't think so. I wanted it to. Yeah, I think it was an internal grab. It could have been an internal grab, but again, I still don't believe that's true. Yeah, I still don't believe that's true. I think by the time Powell speaks, people that went short are gonna have a little bit of regret. Let's see, Nas to 12,500 area during the press conference. Check Nasdaq. All right. Hold on, we'll check Nasdaq, family. Yeah, beautiful. Abel, my guy. Shout out to you. I love you, bro. I only took this Nas position because of Abel. That's why that's why I'm saying that.
Doing really good right now. I'm not even gonna lie.
Yeah. I to be honest with you, again, I do still think by the time Powell talks, like, look, this is already fading off. Like, all this did was come back, feel a little bit of imbalance, and then now you're still kind of getting that push. So, I do think people that went long the dollar got faked out a little bit. Again, I would rather see this liquidity sweep. That's just me personally. That's what I want to see, and I won't execute until I get that. But yeah, indices look beautiful for those of you guys that are long with us. I mean, I have multiple positions on this thing. We are holding from, I'm holding from a lot of places. I don't expect anybody to still be holding this entry. I'll never get rid of this entry. I would probably die before I get rid of this entry. But I did give you guys in the Discord, right, a couple weeks ago, I gave you guys this entry, and I told you guys, please do not let it go until we take out that 12,800. So it does look like we'll be able to get that. Indices are pushing pretty nice, which again, technically speaking, is not great for the dollar, right? So correlation-wise, again, I still do believe that EU goes up. I still believe that gold goes up a little bit. UJ is probably seeing some downward action. Again, just staying with the sentiment. I mean, this hasn't really moved, but nonetheless. Let's see what we have. Nas to 12,500 area. Yeah, I definitely agree. Let's see. Nas seems to have taken liquidity. Yeah, Nasdaq, it didn't quite hit the entry I talked about on this morning's stream. For people that do have the premium access in the Discord, I was looking specifically for like 12, 15ish. But I mean, it's a 5-point difference. So I'm in the trade regardless, albeit from like more like here, but I was running my stop below the lows. So yeah, no, everything still looks good, family. I still think ultimately by the time Powell speaks, again, EU should be pushing the highs. Again, like this looks like absorption if you ask me. I'd be surprised if these came down today. Let's see. Tank Cozy, I don't even know what pair you're talking about, my guy. Let's see. Let's see. Gold is dancing. Nas buying, not the Nas. US 30 buys. Cozy just likes to scream things. Oh, I love you, bro. Yeah, see? Again, family, this is why we stay with the fundamentals. This is why we stay with the logical direction. Right? The news that came out is, strictly speaking, not really bullish for the dollar. It is, in fact, bearish news. Just because we didn't get that initial reaction, it doesn't mean much. Beautiful. Did anybody take positions today? Throw in the chat if you guys took any positions today and what you guys are holding. Because, again, I continue to hold my longer-term positions and stuff. I could have went a lot heavier on oil now that I look at it. I'm only up like 0.25%. In Nas for the buy. Beautiful. Let me go check to see what you guys are talking about in Discord here. Beautiful. Let's see what you guys got. So we got US 30 buys. Yes, GU bought 122,835. Nas at stop loss 12,029. Didn't get stopped on buy. Beautiful. Up 15K on the JPYs. Sheesh, shout out to you, my guy. I'm in GBP CAD from yesterday. Which direction, Tammy? I forgot which direction you were looking. Let's see. UCAD buys. I would be careful with that. Yeah, I would be careful with the UCAD buys. Ignore this. This was from so long ago, that trade. Yeah, I would be careful with these UCAD buys. Again, fundamentally, I believe you're on the wrong side of the market there. GU buys a question mark. I'm not personally buying it, but our bias is for that to continue bullish. I was on a USD scalp buy. Cozy, please don't call signals in the chat, bro. These people are not going to be able to manage it the way you manage it, and they can't see what you see. But, yeah, still appreciate you. I sold US 30 last night. You're still in that. Short-term bullish. I took it out. AUD CAD. No, please don't jump into NASDAQ shorts. Call gold buy is beautiful. Cozy, my guy. Yeah, please don't call signals like that in the chat, my guy. What are you going short on this for? Yeah, I don't specifically agree with you. Abel, you think we should pull up Mr. Powell? Or do you think what he's going to say is going to be rather boring today?
Say that again, bro.
I was asking if you think we should pull up the Powell speech. Or if we should... I don't think he's going to have much to say, to be honest.
I'm pretty sure he's going to be very repetitive. But what you can do is at least show, you know, the community members, the family in the chat, how to actually access it. You know, we could at least start it off, and if you guys wanted to finish it, then you guys at least know how to finish it on your end.
Yeah, I think that's a good idea too. I'll pull that up in a second. Somebody asked me about GU buys, or is it too high to buy? This one has not really had a reaction that has went bullish yet. EU still struggling. Again, I do think the market's gonna wait on Powell. If I was gonna get into GU personally, I mean, like, we just filled out this wick, which is a big kind of entry model for me. Annoyingly enough, we did kind of create like this liquidity grab here, so maybe this fills out the wick. But yeah, I would lean towards the bullish side. I just don't think I would particularly want to buy it, you know, up here and run my stop loss in such an area. I think what I would prefer to get is like to see if we can get another wick fill and then run something like, you know, like this, and then try to swing it at least into some of this fresh liquidity on like the 4-hour and the daily. So I would be more or less looking for something like that on the wick fill, because I wouldn't trust buying into you know, kind of this like nonsense as high as this is. So yeah, I would wait until it probably comes down to 12279 again and see if I could strike somewhere down there. But let's see, family. We're gonna bring up, I mean, we still have 15 minutes till Powell, so I'll give it a second. Let's see. Cozy, bro, please don't make me mute you in the chat. Please do not give out signals in the chat like that. Especially when you're not giving stop losses, you're not sharing charts. It's not helpful just to yell sell. That's not, I'm telling you, that's not beneficial in any capacity to anybody. Please don't do it. I love you too much to have to mute you, my guy. You know, even if you're getting the reaction you want, like you're playing with fire by just yelling random things with no parameters whatsoever. So please do not do that. All right, let's see if we could pull up. Let me go pull up Mr. Powell here. So in case for you guys that don't know that you guys could watch all of these announcements live, what you could actually do is very easy. You just search Powell Live on YouTube, and then you will get a bunch of different stuff from either Yahoo Finance, Bloomberg, you know, CBS News will have replays sometimes. But if we just click on this, you can see they're just patiently waiting for this man to show up. He will be here in about 12 minutes or so. I highly recommend you guys hide this chat because it's just filled with toxic nonsense. And yeah, we'll wait for him to kind of come live. But until that happens, we'll stay on the charts here. Let's see. Skag, do you think the market could retrace to the entry for re-entry? I do think some of these wicks have the potential to fill. I do think, you know, EU, again, will probably fill this wick on the Powell speech, so you probably will again get another opportunity if you are looking for an opportunity to buy. I don't care about catching a buy today on EU. What I care about is how EU specifically reacts once it gets back above this range. So for me, again, I'm not looking to get into a position up here for the buy. If you guys are looking to play that, then yeah, what I would ideally want to see is like a wick fill here and see if I can grab some pricing, and then depending on where you want to kind of run your stop. Again, there's nothing really too clear here for me to run my stop to, so I'd probably just wait for it to grab this, come back up. If I have to grab an entry like this and run like a super tight stop, then I would. But again, this is not what I'm looking for out of the market, right? I would rather miss the little stupid buy that might happen from here, and I'd rather see how it reacts in this daily liquidity after we fill this wick and see if I can get a longer term move that I could hold for a couple weeks, maybe a month or two. So I'm personally not looking for the buy, but that would be my bias of direction on the dollar. So again, DXY, same idea. Like I want DXY to push below these lows, and then once we get that based off the reaction, then we look for like a new trade. So let's see. Do you think that EA 1 hour at 154.96 could be a UTAD? Let's check it out. Let's check it out. So this is less to do with news. You said on the 1 hour, right? All right. So you would be looking. Let's see. What did you say price wise? 154.960. It's very specific. 154. Oh, you're talking about this? Well, it can't really be a UTAD because it didn't really upthrust out of anything. It would have had to push higher to be considered an upthrust. I don't think I would call this a UTAD. I don't think I would call this a UTAD. Again, Jude, you got to remember, ECB has rates tomorrow, and they're widely expected to raise them, and widely expected to potentially even get more aggressive. So, again, this is probably not going to hold. If I was going to look to play this, I would want to play it, like, above this area. So, again, I would expect, like, maybe, again, this pushes down a little bit. Who cares what it does? But once it kind of comes up to, like, here and plays more or less into this candle, is where I would be looking at, you know, a potential area to begin looking at shorts. I don't think I would trust this as the ultimate high. Again, because the euro very specifically has news tomorrow, and the news is going to be beneficial for their currency. So I don't think I trust any of these highs. Again, this would not be a UTAD. If this had pushed a little bit higher and then maybe grabbed more of the inefficiency and imbalance and closed below on some stronger sell volume, I would consider it. But even then, like, yeah, you possibly have absorption today. A lot of sell volume came in and we didn't really go anywhere. I do agree that a lot of these lows look like suspect, so you probably do push below these, whether that happens today or after we get this move. But yeah, I would probably not be looking at this from the idea that this is like the UTAD for it, especially with the news tomorrow. Let's see. Yeah, 10 minutes till Mr. Powell speaks, so then I'll close my mouth and we'll listen to him. A spike. If you're using, okay, Cozy, bro, I'm telling you right now, if you're using pips for indices, please stop. Indices do not use pips. You will never ever in your life hear Bloomberg say that US 30 moved 1,000 pips. And the day that they do is the day that I quit trading. Just be real. Let's see. Yeah, I want to hear the first 10. Yeah, I'm interested to hear what he says too, because I do believe that based off the reactions that we have today, that he might have something to say that will spike the market back up. So, yeah, cool. Any other questions, pair requests? If not, we're gonna wait for Powell here. We got about 7 minutes. I'm actually going to bring the music back for a little bit, if you guys don't mind. Oh man, I closed the tab. Okay, let's see. Bring some tunes back in for now. Somebody said Euro GBP. I'll take a look at Euro GBP. Let's see what Euro GBP has for us. Okay, this is very bullish. Let's get rid of this nonsense. Yeah, this is another one I would stay bullish on. Keeping in mind that both the Bank of England and the ECB, the European Central Bank, both of them have rates tomorrow. So this is going to be probably the worst pair to try to even trade tomorrow, with both of them coming out with rates around similar times. It's probably going to be a nonsense of volatility. And I hate this pair to begin with because, again, they're too closely related for me. But again, based off what I'm seeing, if you're going to like look at some of this lower time frame attempts to the downside, the sellers are clearly not in control and buyers remain in control. So I would probably stay bullish this. My problem, however, is that obviously I wouldn't be buying into something like this. So I would need some sort of pullback. So what I would probably expect is like that this wick would fill. You'd probably play inside of this extreme liquidity where maybe you can get a nice little sell-off just to give you another buying opportunity. So if you're already in this, then yeah, like obviously you're gonna want to try to hold and see if you can, you know, make an exit inside of here, or if we even push beyond it, that would be fine too if you're already long. But if I was gonna look to get long in this thing, you might not even get a chance, but I would prefer somewhere below here and see if I can't snag something. Like maybe the Bank of England increases rates first, you get this nice sell-off, and then maybe you can get back into it before the ECB continues its terror against them. And then even on the higher time frames, like I just don't see any reason to assume that sellers are going to come into the market below here. So yeah, this is a pair that I typically would not want to trade. I don't really like it. Again, I don't like currency pairs that are very closely related in the same region. So I don't like USD CAD, I don't like Euro GBP, and I don't like AUD NZD. They're way too closely tied in their economies for me to take, you know, trades on these. These are generally speaking more choppy than they are smooth. We did take a look at GU and EU and everything else for the matter. Kyle holding on strong. Yeah, Kyle is probably holding on strong. Kyle refuses to give up the dollar buys.
Auto.
Yeah, Kyle is probably trying to hold on for dear life over here, I'm sure. Alright, family, let me go pull up Mr. Powell and that stream. Let's see if, yeah, he's still not still hasn't walked out the door yet. Alright, so let's vibe to this music. We'll give Mr. Powell here the other 3-4 minutes that he needs. This is my analysis for the person asking on GU. For AJ, this is what I'm looking at on GU. If it can give me it. Again, I'm not interested in the buy as much as I am seeing what happens above that liquidity, but this is the setup I would be looking at if I did care to buy. Family, I don't have the name of the song. It's generated by AI. Here, I'll send the link in the Discord for you guys. Here, only because I know you're in the premium. There, that's the YouTube that I'm streaming from. But it's AI generated. It doesn't have a name. 2:30, so this man should be walking out that door any second. Is this Powell's intro if he was a wrestler? Probably. If Powell was in the WWE, yeah, this would probably be his theme song. I wouldn't doubt it. Nothing like a Fed member being late to the meeting, man. Alright, nothing like Mr. Powell being late. Oh, I'm not even. Oh, there he is. I was gonna say, maybe he's not late. Alright, let's see.
Inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Chris Rugaber, Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which is
I'm gonna just mute him really quick. And again, guys, you know, we got those wick fills, so just keep your eyes peeled. I did personally execute on that GU. We'll see if it sticks. But yeah, let's see how he answers some of these questions. But he's probably gonna just be super repetitive. This is all stuff we've already kind of talked about.
Inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change?
All right. Let's first off, because these questions are terrible. But again, guys, look, this is what I'm talking about. This is why fundamentally I told you to just wait on the wick fills and then stay with the logical direction. You guys get too emotional when you're saying, and Cozy, bro, I'm specifically gonna call you out, like sell where, right? You gotta stay in with the fundamentals, my guy. These trades are too easy. So NASDAQ just got smacked again. GU, beautiful reaction. Like, I mean, if you took this, you're already up 50 pips. You may as well go break even and chill. Same thing I told you guys on EU. Wait for the wick fill. You're gonna get that wick fill, and the fundamentals are gonna kick in. You cannot argue with the fundamentals. So again, like now some of this is clearing some of the liquidity that we were looking at, but again, like I said, you're probably not gonna get the reactions that we want until potentially next week. But we'll see again how the day closes. Anything you guys took should already be, risk free. Like I said, GU was probably the best thing you could have took because again, this was, not really trading at its extreme highs like EU was. Again, does this stuff stick? I don't know. We'll have to see if there's any sort of follow through. But so far, so good if you guys did execute on any of the stuff that we talked about. Again, to each their own with your risk and what you're okay with. But this is why I tell you guys are looking at like these little movements that just mean nothing, right? So again, I hope you guys are at the very least learning a little bit about the fundamentals and how you're supposed to react to this stuff, right? There was nothing that was specifically bullish dollar, right? Other than you wanting to force a potential trade. So hopefully you guys are able to grab this GU. It is flying. I took a couple positions on a 200K funded that I have, and we're up whatever it is. It might maybe 1%. I didn't go too degenerate on the trading, but nonetheless, again, same thing with Ethereum. I'm sure, again, look, it's all just liquidity grabs, just taking you guys out of the market before things continue in the very obvious direction that they're meant to go. So let me know in the chat, guys, if you guys grab something. Again, we went over exactly what to expect. I told you guys to wait on the wick fills when he speaks. More than likely, all this stuff's going to break higher. Right, so let me know what you guys got in the chat, right? Let me get a dollar sign or something if you guys are in any sort of position. And whether or not you guys are holding with us. I see Eric executed on the GU. Love it, bro. Fantastic job. EU booming after the wick fill. Yeah, love it. Gold. Yeah, if you grabbed it. Ethereum, beautiful. Ethereum. No, let's not let's not jinx the markets by saying, yeah, we don't want to do that. But again, guys, easy markets are easy. There's nothing difficult here, right? As long as you keep in mind the longer term bias, you keep your risk to reward tight. You're not over risking or anything like that. These moves are super easy. I do want to hear Abel's thoughts. I know he probably got a second to go through the data, bro. So what's up? What are you thinking, my guy?
What a time to be alive. That's what I'm thinking right now. Because this NAS position that I snagged when it went down for that push is absolutely spectacular. Now we just got to see if these moves are going to hold, right? Because I'm loving the reaction, which again, based off the data itself, is probably the reaction we should have gotten, right? Again, because just think about what I was saying earlier, guys, right? When we're looking at this data and this information, even after the release itself, logically, what makes the most sense for assets or currencies to actually do, right? If they are lowering by how much they're going to be raising rates, that is going to bring optimism, right? When we have an optimistic sentiment of the market, that is going to cause usually the riskier, quote unquote, riskier assets to skyrocket, right? So things like the stock market, cryptocurrency, right? I mean, like we're seeing now, indices, right? All these assets are moving, and it's probably just because now we're becoming a lot more optimistic, and the sentiment has pretty much shifted to being more optimistic. I mean, look at these markets now, right? NAS is absolutely on fire right now. US 30 is absolutely on fire right now. All right, so yeah, that's pretty much just my thoughts, bro. It's literally what we expected anyways. So I'm excited to see now if it can hold. That's gonna be the biggest question. Can this actually hold? Yes or no?
Yeah, that is going to be the biggest question. I do think, again, because we have additional rates tomorrow from other central banks that are going to be more aggressive than the Fed is, and for damn good reason, that, again, a lot of this stuff is very clearly bullish. I mean, we've been saying it all week. I've been telling you guys, all these shorts on EU and GU, they're going to be, they're short-lived. They're fundamentally, it's just too easy. So hopefully you guys made some good money if you did follow. I see that AJ said I got him out of his GU sells, so in that case, I saved you money, which is arguably better than making it for you. Let's see, a bunch of people got an SPX, NAS, Bitcoin, EU just hit weekly supply. Yeah, but again, remember, just because, even what I'm looking for on EU, does it hold up here, right, is the question. But it more than likely does. So I'm not going to sit here and just be like, oh, because it's in some sort of liquidity that it's going to fall. right? That's like the complete worst logic. Is like, okay, just because it's hit supply that it must go down. That's, that's not true. Like resistance and support, same thing. It's like just because it hits a resistance level or clears a resistance doesn't inherently make it bullish or bearish. It's all about the reaction and effort behind it. And with the ECB looking to increase their rates, I think a lot of people are going to continue to look for a bullish EU. Again, I mean, at this point, how many pips am I up on EU now? 1,300. Let's go. That sounds so crazy. Oh, that sounds so crazy. But yeah, nonetheless, family, again, if you guys haven't booked some partials on this, remember, make sure you guys pay yourself a little something. Take 20%, 30% of your position off the table. Hold the rest, because if it does turn around, you don't want to be like, okay, I caught this beautiful trade, took nothing off the table. So although they should continue, as they hit some of this liquidity, be smart. Pay yourself a little something. You guys always know it's easier to hold for the long term when you already have paid yourself, right? So if you're blessed to have more than a 0.01 or even like a 0.05, really, take a little bit off that table, withdraw it if you have to, to feel good about it. But yeah, very, very, very beautiful trading day. Don't be surprised if I drop this as like a recap video on Instagram and whatnot, because there's a lot of lessons to be, to be had here for people. So yeah, beautiful, 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 family. I don't really have much else for you guys. There's not any like we could do anything else with the markets. They just gonna be flying. They just gonna be paying us. But let me know, family. Let me get some final thoughts in the chat, right? Let me get some final thoughts. Was this stream helpful? Did you guys, did you guys able? I mean, I know you guys were able to get in positions because you guys wrote them in there. But if you guys did enjoy it, throw a sub, throw a like on the stream. We love and appreciate you guys as always. If you guys want more stuff like this and to be able to like really trade live with us, Tuesday, Wednesday, and Thursday, as well as get master classes to really help you guys through all of this stuff. You guys already know the deal. Go to profitsociety.co, jump into the premium, right? Whether you guys jump in the yearly or the monthly. And again, if you weren't able to pull, this from the trades today, especially if you're on a funded account, you might be doing something wrong. So yeah, that's all I got for you, family. Let me see what we got in the chats, and we'll go from there. So let's see. When should I TP on GU? All right, so let's just talk about TPs real quick. So again, for one, if you're in GU, take partials, right? Take partial positions here. I would tell you would probably want to hold this trade for the longer term. But if you want like a very specific exit, assuming that we could break above this supply here, I would be looking at like this liquidity pocket. So I'd be looking at like, 126.25 is probably like a good exit. And considering we were only risking about 30 pips and that's about 300, that's a beautiful 1 to 10. But this will probably be your best exit on GU if it does continue. On EU, again, I probably would just continue to hold this for the longer term. But, 108.50 is a good little exit on that as well. But if you want my honest opinion, I wouldn't even have a TP. I would just partial out and continue to hold my trade, right? You think that I'm running this trade here? You think I like if I had a TP on this trade, I'd be limiting my upside, right? So I wouldn't be in a 1 to 86 risk to reward ratio, right? This is literally paying me out as a 1 to 86. I don't know where they do that at, right? But I do that apparently. Again, this is very uncommon. You're not really going to get trades like this, but this is why I don't use a TP, because in cases like this where the fundamentals are so on your side, you don't want to limit your upside potential, right? The game is not to take a new trade every day and to put yourself at risk every day. It's to put yourself in a great pricing that is fundamentally aligned and then being able to manage and hold that for as long as you can. So that's why you partial out, right? You take 20, 30% off your position, you put your stop loss at break even, and you stop touching it. You stop doing stuff, and you just kind of let it work until you see a reason to actually close. And again, we're not specifically seeing that in the market. So pay yourselves a little something, enjoy that, hold the rest at break even, log out of your account if you have to. If you can't, stop pushing the button or whatever it is. And let's see what it gives us. But listen, family, that's all I really got for you guys. As always, we do love and appreciate you guys hopping on. I can't stress enough how important it is for you guys to potentially hop in, to the premium. You guys can ask the premium members themselves. I'd be more than happy to tell you guys how lit it is in there. But yeah, we definitely love and appreciate you guys. We're going to end the stream now, and we'll probably see you at some point tomorrow to talk about the interest rates for other central banks. But on behalf of Profit Society, guys, this is your boy Skag. I'm tuning out. Hope you guys enjoy the rest of your day.